Hi everybody, welcome back to another Walking with Charlie. So as you can see, it's a beautiful winter's day. We've had quite a bit of snow. It's not quite like Texas though, but it's lovely weather out here today. Charlie and I are all bundled up. There's Charlie. He's enjoying today in the weather. He's got his little jacket on. We're sporting the High Point University doggy leash because David, he's down at High Point University, North Carolina, and this is their opening weekend for their baseball season. So that's exciting. He can still sniff everything, even through the snow. Okay, so a couple things to talk about. So one of the things I think all of us as investors should be thinking about from last year was that we kind of saw the whole movie of investing in those 12 months, right? Like we went into 2020 with a lot of optimism, a lot of good markets and things, and then boom, out of nowhere, we get this, what's called a black swan event with the virus. Everything goes into shutdown, market drops like crazy. Pretty quickly, there's a new environment of low interest rates, lots of stimulus, trillions of dollars being spent. Market rebounds right back up. Actually, fastest market rebound ever in history. We had the sharpest drop followed by the fastest rebound. You didn't even have time to catch your breath, and up everything went again. And we saw a lot of money rotate into what I've been calling the pandemic trade. Now we're seeing it widen out to the wider economy. And as you usually get to see, is money starts flowing when you have that kind of liquidity into some of the kind of crazier aspects of it. So we get some extremes. So the whole movie of everything you ever wanted to know about investing was pretty much all in 2020. And I think the lesson for most of us was stay invested, stay diversified. But what we're seeing now is this kind of move to some excess, right? And GameStop from a couple weeks ago being one of the examples of that, how there's so much money out chasing all kinds of crazy ideas. And we're starting to see that flare up. But more importantly, I think we're starting to see some decent optimism around when the economies reopen and with vaccines and that kind of thing, and a lot of hope that as we get into a reopening later this year, fingers crossed, of course, that there's all this pent-up demand for spending, because lots of people have done a pretty good job of not spending their money, and we know that the average balance sheet is pretty good for most households. Obviously not everybody, though. There's some people still struggling. But we're also starting to see new enhancements and things in investing. So what I'm going to mention today is we are seeing, as of this week, we had the world's first launch of 2 BitCoin ETFs. So an ETF is an exchange-traded fund, and actually they were invented in Canada back in 1990, believe it or not, and they become very popular investment vehicles. And they're really just a box that investments can come in, and the exchange-traded fund can be invested in all kinds of different things. So the fact that we now have some that are holding Bitcoin is quite interesting, and I want to give a shout-out to my friend Sam Safe at Purpose Investments and my friend Raj Lala at Evolve ETFs, because both of those guys created the world's first ETF. So Sam created the one for Purpose and Raj created the one for Evolve, both of which started trading this week. And I'm going to put some links up above here to some interviews I did with them over last year, because I think both of those guys are great innovators. Now, whether or not something like Bitcoin is a suitable investment for you, we're not going to talk about that today. That's really left, as it always should be, to a discussion on your own personal situation and whether or not it's appropriate. But I want to make the point that in any time you invest, be really careful about chasing what's popular, right? Just because something's popular doesn't mean you ought to be buying it, whatever it might be. The crowd's often wrong. So, and it's interesting because Warren Buffett has lots of great lines, but one of my favorites is that he says, you have to remember that in the short term, the market is a voting machine and it votes for what's popular. But in the long term, it's a weighing machine and it weighs value. So I think it's important to really step back sometimes and say, just because something's popular, is it actually of value and should you be investing in it? So be really careful about the madness of crowds. But I do want to talk about one area where I think we ought to be paying attention to what is going to be popular. And this, I think, is a really important one for many investors. And I've had a few conversations with some clients in the last couple of weeks, and I really want to drive this point home. We have a whole generation of investors, boomers, that are either just in or about to retire. And very quickly, I think they're beginning to understand that the way they were programmed to invest isn't helping them. They were programmed by their parents to think about capital preservation is really the most important thing. You got to protect your money, got to protect your capital, particularly as you get older, right? Can't afford to lose it, can't afford to take risk. And traditionally, that would have lent to having a lot of money in bonds and GICs and other guaranteed investments to protect your capital. But what we're seeing, and this was exacerbated by the pandemic, was interest rates falling to lows that we've never really ever seen before. Like thousands of years, like actually I was reading an article that someone determined that last time interest rates were this low globally was something around the Egyptians. I don't know how they figured that out, but the point is historic. So if you're going to try and build a portfolio out of investments that will protect your capital, you're going to discover you don't have any income. And more importantly, that income is not going to rise with the rate of inflation. And to be honest, that's the risk I think most of us should be thinking about. So my point is that we have this whole generation of investors that are going to try to go into something like 30 years of retirement with investments that are completely ill-suited to providing a rising income in retirement, which ultimately is what the money has to do. And they're all going to realize pretty quickly, they were taught by their parents, by the textbooks, by their advisors, they got to protect a dollar. And what they're going to realize is that no, that's not the trick. You got to protect what a dollar buys. That's the important thing. So what does that mean? So what we have to do then is find investments that by their nature raise their income over the course of time. And there's only a few investments that do that. So things like real estate, for example, infrastructure, great businesses that pay an ever-increasing amount of dividends, that have fortress-like balance sheets. These are the things that can raise income over time. And so as people begin to realize, no, my grandparents, my parents, everybody told me to protect a dollar. I have to protect what a dollar buys. So what investments do that? And I think they're going to start rotating as they start figuring this out to the exact investments that I think most investors ought to be really building as the foundation of their portfolio. So I'm going to use another Canadian invention, which was from Wayne Gretzky, where he talked about go where the puck is going. And I think as investors, yeah, there's things that might be popular in the short term, but I'm paying attention, I would recommend you pay more attention to what's going to be more popular in the longer term. What are the investors of today going to have to buy? Can I really be thinking about moving towards to try and fund that 30 years of retirement income? Because I don't know if it's going to be Bitcoin, but I'll leave that to you and maybe if you're a client to talk about that later. So, Charlie and I are going to keep rolling along here. It's actually not that cold. It's lovely. We have some clients that are in Texas, and we've had a chance to talk to them and hear about some of the stories as people are struggling with the crazy weather that they're having. But the rest of us are locked up at home. Don't know how much longer this pandemic's going to happen and go on for, but I think we're all in the rhythm of it now. The one thing I also want to encourage you to do is just persevere a bit longer. Spring's got to be around the corner. We'll get brighter days ahead. Okay, so with that, thanks very much. Talk to you soon. I know, Texas is colder than this, Charlie. Yeah, I know global warming. I don't get it either. I don't get it either, Charlie. I don't get it.